We have the Taiwanese index, which is up around 130 points. Prime Minister Narendra Modi arrives in Moscow for the 22nd India-Russia Annual Summit.
For the Nifty Bank, watch for 51,996 to hold.
So ITC is showing signs that maybe it wants to get out of that zone that it's been in.
The company on an overall basis has flattish sales growth, double-digit constant currency growth.
Nifty is starting about, 20 points higher.
The risks are increasing. I think there's no doubt in anybody's mind.
Quite a start, but it appears things are, picking up a bit.
This is a subsidiary, the terminal business subsidiary from Aegis Logistics, and it's a large IPO.
Buyers of hybrid cars in Uttar Pradesh have started getting a 10% exemption.
Is a 100-point uptick for the Nifty today.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Okay, it's a good-looking screen. Indices were flat yesterday, but no such problems today. Markets are up 0.5% odd, across indices. We'll sort of talk about markets in greater detail. This is Closing Bell. As always, we're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, good afternoon.
Hi, afternoon. New record highs for our markets and consolidating now above 24,400.
I think we have a star mover, right? It's Maruti.
Yeah.
Without a doubt, it's Maruti. And really 6.5–7% move on a stock, which, by the way, it started in the morning with a 3% pop. Since then, it's added 4.5% on top of it. So it's quite something. And we'll focus on that one in greater detail. The auto indexes, thanks to Maruti, up 2% as well. PSU Banks, Pharma, FMCG are some of the indices which are higher. You got the small cap index, which is up 0.5%, mid cap index, which is up 1/3%. You got gains. And it's not just, of course, the indices which are doing well. Lots of stuff which doesn't find any mention in any of these indices is also doing well outside the indices. The smaller micro caps, it's absolutely a vibrant rocking screen out there. And really, you go down the list of stocks and every day you find stuff, newer stuff which has not performed for a couple of years, and suddenly it's in the mix and you wonder, well, what has changed? Is something happening at the margin? I think more than anything else, the one explanation is essentially people running out of ideas and expanding their horizon of what they want to do, what they can do, because otherwise, it's been a pretty sharp, strong run-up in well-owned names, especially. So you're essentially looking outside of the well-owned list and down the market cap curve and outside of the benchmark indices. I think that is the one explanation which I think makes sense with what is going on with so many parts of the market right now. Prima.
Well, some of those pockets today are the refining names. So at Chennai Petro, MRPL is seeing outsized gain. Tea stocks are flying high. Pull up the tea names like a Jayashree Tea or Rossel India, Harrison Malayalam. These are stocks which are up close to about 12%. But can't take away from the fact that today the markets have hit new record highs and the Nifty is holding on to levels of 24,400 and consolidating. The star stock has been Maruti, but giving it company is also M&M. You've got Hero MotoCorp and ITC. ITC has been that, the stock which has moved up close to about 7% in the last fortnight, and it's playing a bit of a catch-up because year-to-date, even after the 7% up move, the Nifty IT index is down 2% versus the Nifty FMCG index, which is up close to about 4%. So it was a bit of an underperformer, and it's playing that catch-up. PSU banks like State Bank of India, Union Banks, and IOB, IDBI Bank, all of these stocks are higher in trade, and railways are seeing a bit of a reversal and sharp downticks. So Railtel, Texmeco, Ircon, RVNL down about 4–5%.
Well, that's right, and ITC is coming back. Actually, if you look at it on a year in the last 1 year, still the stock hasn't even moved up 1%. In fact, it's still down, by 1% odd. So that clearly is making a big comeback. As Reema mentioned, it's playing a comeback. There is valuation comfort. The street believes that maybe we're not going to get any kind of shocker from the budget as well. Normally, the ITC is a little bit nervous going into that event. And, Besides that, the monsoon has been good, which could bode well for some of these FMCG names. So that one has been the big mover. Now, in fact, it's breaking out at around that 450 odd mark. How do you trade the final hour of trade, though? We have Mitesh Thakkar who joins us. Hi, Mitesh. Good afternoon. Good to see you. Well, we're sitting with a gain of around 100 points odd, but I think the bulls will want the Nifty to go ahead and decisively conquer the 24,450 odd mark, which as of now has not yet happened. How would you approach trade?
That's right. I think, the level to capture is 24,450. And while we haven't captured it, we are now, decisively close to it because the option, I think, is at 24,500 and then 25,000. So 24,500, 450 zone would be important just as you approach the 24,500 mark. I think it will be an important level. Let's see how it goes. We've not still traded the index because, while we've made a new high, the indicators are still flat. So there's no sign of a vibrant breakout taking place. So we'll keep our wait and watch mode on. But I think as you are rightly highlighting, it is the individual stocks which are showing good traction. And that's where, a majority of action is taking place. I have a buy on M&M with a stop at about 2,900 for targets of 3,010. And Lupin is showing good continuation after the breakout. So Lupin is a buy with a stop at 1,780 for targets of 1,850.
Okay. Stay on, Mitesh. We'll come back to you. Deepak Shenoy from Capital Mind is with us. Deepak, Maruti 6.5% up move. We've heard the news now, but does it warrant this kind of a 7% uptick that we're seeing? What explains it?
Hi, Rima. I'm sorry. I think I might have missed the news. In fact, I just saw the numbers being up, so maybe I'm not aware of why they've gone up. Is this because of the numbers or is this something else?
So Maruti is moving up because Uttar Pradesh has waived the registration fees on hybrid cars. Yes. So that's the only piece of information that we have. So a bit of an incentive towards hybrid cars. So Maruti is reacting positively to this, but it's in Uttar Pradesh.
Yes, it's. I think it's specifically for the sugar lobby because in a pure electric car you can't have any ethanol blending. So and they've given so much, to sugarcane farmers. Specifically matters to UP and Maharashtra. So I think the UP government has decided that you can't have electric takeover, even though it may be more efficient. So hybrids are better in that context. So and hybrids can actually do a very good job with running on higher blends of ethanol as well if the engines are right. So I think that prompted them. Maruti has almost no presence in electric. M&M does. We own M&M for that, as a disclosure. So in that context, kind of more biased towards M&M and perhaps some of the larger vehicles in this format. But I think good for Maruti as well. It's been a good year for the auto industry in general. I think in the stock markets, hopefully the sales numbers also start showing up.
Right, but in this case, so Maruti has sort of lots of models which offer it's a combination of CNG and petrol, right? I mean, so it's got a strong portfolio in that sense, and there are some estimates which suggest that for Maruti, I'm just looking at what the numbers are, but UP is about 12% of Maruti's domestic volumes in FY24. And of course, hybrid is very, very small, but it's a very strong move on the stock, I guess, also because it's sentiment positive, right? What can happen in other states, etc. It's a growing market.
Yeah, I think UP has the most incentive, but not really any other state. So why would Karnataka, for instance, want to do that? Because we don't have that many sugarcane farmers in comparison with Maharashtra and UP. But I would say here the big deal is Delhi. It is not actually UP itself. People in Delhi can buy cars in Ghaziabad or Noida, qualify for the lower UP numbers. Delhi is one of the largest registrations of cars as a single region. NCR region in India is probably the highest percentage of cars as a representative region compared to any other in India. It's been like that for about 30 years now. So maybe that's what drives a lot of potential here, because you could stay in Delhi, buy a car in Noida, and still drive it around without having to pay any specific taxes. Whereas in Karnataka, if you bought a car in Tamil Nadu, you'd end up paying a lot more taxes. So the cross-state kind of mechanism isn't there. These are also added factors here, which probably play into thought processes on growth. Plus, Maruti entirely gave up its entire diesel line a couple of years back. So they said no more diesel. I'm an unfortunate, victim of that because I own a Maruti diesel car, but it's a good car, but they've stopped the entire line. It gives them more potential as well. So I think overall good sentiment there, but does it warrant a 6% gain? That is, the market's call. Perhaps I would wait to see the numbers, but it will still take some time for much of that to show.
All right. Hi, Deepak. Good afternoon. Good to see you. And let's talk about ITC then. That's playing catch up. You're just pointing out that the Nifty is up 25% in the last 1 year and ITC is actually down a couple of percentage points. However, today you're seeing the stock move, I think, put today as well as yesterday's move together. Last few sessions, it's up nearly around 8.5–9%. What do you make of the stock at around 455? A couple of reasons why the stock could be higher. It's playing catch up. It's still valuation-wise trading at around 24 times, or with the yield of closer around 4%. The monsoon has been fairly good, and the street is not expecting any kind of shocker from the budget, going by the stock price move. At around 455, what's your view?
I think it's the cheapest FMCG company around, to be fair. I think, Najal, the problem really is, ITC has been subject to a lot of, thought processes around tobacco and FMCG. It's more an FMCG play now, according to me, in the longer term. And because it has such a large rural supply chain, they're going to benefit in some way if the government kind of in the budget gives some more impetus to rural development and perhaps infrastructure development in the rural areas, which will probably help ITC. And to be fair, many of these quality names, whether they're ITC or some of the others, have actually lagged the market severely in the last couple of years, which is why a lot of quality-based funds have not really been able to make any meaningful headway in comparison with the indexes. So maybe you're right, it's a catch-up play. IT did a catch-up play maybe a week or two back. So FMCG was the other laggard. So I think it's every there's a little bit of sunshine on everything nowadays, but at different points of the day.
Analysts also pointing out, as Nigel was saying, there is a low chance of another cigarette tax hike because we saw a minor tax hike take place last year. And analysts are quick to point out that we seldom have 2 consecutive years where there is taxation on cigarettes. Otherwise, there is an increase in the illegal consumption of tobacco. And therefore, the probability is quite low that we will have anything adverse coming out on the 23rd of July on the budget day. So, Deepak, any new ideas from your Ken?
Not so many. Actually, we're still bumping up the old ideas. We still have LIC, L&T. I think L&T has actually done something interesting recently, starting to get into some more areas. Now they're talking about semiconductors as well. But there's also a few other companies that have been in our portfolio for a while. For instance, Keynes, which is in the semiconductor space by itself, and has a pretty big field ahead of it in terms of potential expansion. Of course, many of the projects are early. The stock's up 4.5 times or 5 times in a year and a half, so it's not like the stock is underpriced. But I think the valuations probably reflect the fact that there's a very large market out there potentially, and semiconductors are semiconductor-based things are our third largest import after crude oil and gold. So it makes sense for India to at least provide more impetus for domestic companies to add value in that space. Additionally, I think the defense and the shipping plays, shipyard plays are still going strong. The field there is, it's not 1x or 2x, it's been 5x or 10x higher than what they were maybe 2 years ago. Stock prices have also gone up correspondingly, but we still hold some players there. Lastly, I think we've been very positive on high-end manufacturing in India. So companies making machine tools or higher-end manufacturing of engines and so on are companies which are in our focus. So we've added more to them. I'll wait for results before I actually add a new idea. But I do have some, very small amounts of cash, so maybe useful to deploy it after the results.
I like how you said it. Everything gets some sunshine at various points in the day, right? And the sun is really shining on play. It's not shown in many years. It's really quite something. Remarkable markets we're kind of experiencing. Paytm, I remember Deepak used to have some a position. It started to. I'm sure you would have read that interview with Vijay Kedia yesterday. And do you have that position still, or what? Do you have a view?
No, we're not allowed to comment on Paytm. We have a conflict, so we've not owned it for over 2 years now. So just no comments at all.
Okay. Any of the other, the PB fintech or the platforms essentially, or Zomato, Swiggy? By the way, there was another story today saying that in secondary markets, Swiggy shares have started to change hands ahead of the IPO. Of course, it's got Zomato as a valuation benchmark. Thoughts?
Yeah, I think Swiggy has been talking of an IPO for a while. It's for a change, a Bangalore-based company that's going IPO. I think that will be an interesting thing. Also, because Zomato has been the only player in that sector. Though Zomato, I think, is going up more on the lines of Blinkit showing better numbers. Swiggy has relatively lesser share in the instant delivery of grocery segment, but pretty good numbers on the restaurant delivery front. I like these plays for the restaurant delivery business more than the grocery and instant delivery business, because I think at some level this is just too competitive a space for anyone to get a clear win, even with all the dark store dynamics. I think India is just it's just too competitive on last mile retail for any clear winner to emerge. Having said that, I think short-term plays, momentum plays, they might still make a lot of sense. PB fintech has more leeway to it because I think they're going with the insurance brokerage license. They get more better economics. They also have some of the sales that's been happening since the IPO that's starting to peter down because some of the VCs have been selling their shares and more stronger players have been buying. So once that peters down, you actually get a little bit of bump up. That's what's been happening with the stock as well. So I think that way it's a decent longer term play because hardly anyone sells what they sell, specifically term plans, and hardly any big player or established player does that. So they get a pretty good leeway in that. But the growth has been a question, and we'll have to see where that goes because growth has not been very kind to the industry and definitely not to intermediary players.
Okay, all right. Deepak, you may want to sort of listen into this next story because I think you'll have views on this one. And this is a exclusive coming in from Money Control. Now, in a move to curb the F&O frenzy in the market, SEBI's expert committee, the working committee which was appointed to look at this, is likely to propose new regulations. Sources tell Money Control that these suggestions will be reviewed by the Secondary Market Advisory Committee before a final decision is taken. My colleague from Money Control, Mahalakshmi, is here with the details of what she's picking up from her sources. Mahalakshmi, over to you.
Yeah, thanks, Prashant. So obviously there are 6 or 7 recommendations that the advisory committee has made. This will obviously go to the Secondary Market Advisory Committee and then the final decision could be taken, or SEBI could also put in the consultation paper for public comments and then take a final decision at a board meeting. That is all still not clear, but let me tell you some of the points that I've picked up with respect to what are the recommendations. I think the most important recommendation is increasing the contract value, the size, lot size from 5 lakhs to about 20 to 30 lakhs. That's like a 4 to 6-fold rise, which is essentially to curb the frenzy and make sure that they're suitably expensive for retail investors to get out of the trade. So that's point number 1. Second is right now you already have every single day of the week you have some expiries. So exchanges will have to, particularly NSE, because it has the maximum number of contracts, will have to choose, and they will only allow one contract per exchange. So BSE can have one contract and NSE could have one contract. The other things are like minor stuff, which is more risk management proposals in nature. For example, increasing the margin requirements closer to expiries, as we've been seeing that on the day of the expiries, there is extreme volatility, what we call injections because of high-frequency traders coming in, etc. This other thing is intraday monitoring of positions in F&O. That again is a risk management proposal. More or less, this is what it is. Right, so the first two are the most important things.
No, absolutely, and we'll see how this goes. These are likely to be recommendations, and then we will kind of see how they are, what is finally implemented. But it's sort of good to get the details at this stage. Mahalakshmi, thanks very much for that. Deepak, we'll leave it there for today. We'll sort of have you back once we have, these are important sort of recommendations which are being made, and I think there'll be a fair bit of debate around this since it's the largest market now, largest futures and options market in the world now. We'll take a quick commercial break here as well. On the other side, we'll have Vijay Kedia. He's, of course, a large individual investor, really needs no introduction, joining us from Ahmedabad. He's also someone who has strong views on, the euphoria which is going on in the markets. He's got some views on, a lot of the trading speculative frenzy, as he himself has put it in our previous interaction. So all of that coming up in just a bit from now. Welcome back. As promised, we have Vijay Kedia now joining us. He's a large individual investor. He's managing director at Kedia Securities. Really needs no introduction. Vijayji, great to have you with us here. Thank you very much. You're joining us from Ahmedabad. I'm assuming it's a business trip with maybe a visit or two at Atul Auto as well. And that investment of yours has done fabulously well. But today, let me start by, we'll talk about the electric vehicle theme, etc. But let's just start with the markets, because every time we speak with you, between the last interaction and this interaction, markets are up a couple of thousand points, literally. Right? I mean, that is the kind of remarkable markets that we are in. I don't know if you just heard our colleague from Money Control, Mahalakshmi, was talking about the, some of the measures which SEBI is now SEBI expert panel is looking at to curb F&O, the huge frenzy in F&O trading. It's something that is close to your heart as well. I mean, you have, over the last 1.5 years, spoken about investing, not trading, looking at the longer term, etc., etc. So how do you look at this? What is your view on the markets right now? Let's begin there.
So I have been talking about all these things not for last 1 or 2 years, maybe for last 10 years or something. The first song I had written about against this F&O and all, maybe in 2016 or 17. Anyway, now, unfortunately, I could not hear what Mahalakshmi ji talked about all these things. But I am very much sure that the SEBI is really, working very hard, and they really want to stop this frenzy, which is, or this euphoria, which is going on in this market. SEBI is definitely worried about it. And if I can use the word, I think it is not euphoria. It is like a stampede in the market. Even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business-wise, career-wise, and everybody is talking about stock market only, that they want to trade, they want to make quick money, and they want to, break their FD, and they want to, somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again, join stock market and all. So I think that this situation is not, personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market.
Vijay, you say stampede. People get hurt in a stampede. Here, people are making money, hand over fist, maybe a little too easy, right? And you talked about Ahmedabad. If there is one city where people will talk about markets, it is Ahmedabad, right? So it is not. But are you saying that it is getting a little too much? I mean, the very, very rosy kind of optimistic scenario. And are you talking about the overall market or only what's happening in F&O?
The F&O overall market also, I think there is a frenzy in the market, even in cash section also. And it is not Ahmedabad, you can say, call it, because people here, all this community or Ahmedabad is, they know stock market, they understand the stock market. I was in Bhubaneswar 5 days back, and there also people were really talking only about stock market and all, what to buy, what not to buy. And most of the people were discussing about a future and option only. So this option is a new buzzword, in India now. Every Gen Z or whatever you call them now, they want to try their luck in option, future and option. So it is going out of the way, no doubt about it.
Vijayji, afternoon, Rima here. Give us your views on the budget, because you are of the opinion that we will see some sort of taxation on capital gains. So first your view, and if it does come in any form, how much will this be the straw that breaks the camel's back? Do you think it's going to hurt tremendously? How will the markets react?
If you ask me, I think there's some tinkering capital gain tax is going to happen. Maybe either they are going to increase the tenure, which is now 12 months, maybe they will increase it to 24 months, or they will increase the capital gain tax rate, which is 10% to maybe 15 or 20%. I think it is going to come because best time is the best time to bring any reforms. Okay, when in worst time you cannot bring all these reforms. And I will give one different perspective, Rima. You see this, whatever volume is happening in this market, this is 90% or more than 95% volume is of future and option only. Hardly 10% people are investors in this market. And out of those 10% of those 10% are long-term investors who really hold the shares for 12 months or beyond that. So I don't think ultimately it is going to hurt the masses and all. On the contrary, all these people who are indulging into this future and option and buying today and selling tomorrow, and this momentum buyer and momentum trader and all, they will be happy because they are paying full tax. Okay, so I don't think it is going to hurt the market. As it is, market will need some excuse, to cool down. So maybe that would be an excuse to cool down the market. But I think government will certainly consider. This is what I personal view. If it does not come, good. I would be happy.
Hi, Mr. Kedia. Good afternoon and good to see you. And you know, what I fear is when I go home from work, I go in a cab and sometimes the cabbie is already, you know, he's looking at the rates, he's trying to do something. I'm happy when I'm going home because I know the market is shut. Otherwise, they have it at their display, which makes me a little bit worried. So you're calling for some action from SEBI. You're saying maybe the government will tinker with the rate or maybe with the tenure as well. So let's see how that goes. But let's focus on a couple of themes. One theme that has come to the forefront for the last couple of years at least is the EV theme. And you've taken a big chunk in Atul Auto. That's been one of your big winners out there. We spoke to the management just a week or so ago, and they were talking about EVs being around 25 to 30% of their mix. Don't you think but that valuations now have got a little bit expensive for a lot of these EV plays? Atul Auto, I think the other way you're playing it is precision camshaft as well. So give us your comment on it.
So we are not discussing about any individual stocks, but just for reference purpose, since you took the name of Atul Auto, so let me tell you, not Atul Auto, all electric, all EV shares, you name any shares, all are expensive in this market. So and all are rising on this expectation that that earnings will catch up. So if suppose if earnings don't catch up in next 6 months to 12 months, then of course they will also, you know, go their own way. So as on today, if you ask me, looking at the previous past balance sheet or past numbers, all those shares are expensive.
Okay, all right. So EV is a little bit expensive, you know, the theme on the whole.
Future is bright. But future is bright. Again, you have to take a call that you want to take a call for 6 months or you want to take a call for 5 years. If you ask me, since I am invested, I am taking a call for 5 years. You know, so that difference, that perspective change of that different opinion is because of this only.
Got it. Okay. All right. So you need to sit in it for a longer ride. You know, you can't be looking at this short ride out there. So that's on the EV themes, expensive, but there is a runway. And in the years to come, we'll see that culminate. So that's good news. The other theme you've been quite positive on is on the infra theme. And that's as well, you know, a lot of investors, they have been talking about this infra boom here in India. One of the stocks that you're invested in is Patel Engineering. And we're at the untimely demise of the promoter, you know, Mr. Patel. What's your view on the theme? And if you want to comment on this particular stock?
No, again, I think it is again SEBI rule that I shouldn't talk about particular stocks and all. And since you have taken the name, so my condolence to the, you know, that family and the company because of this, you know, untimely death of Mr. Patel. Let me tell you one thing. It's very clear. I have also thought about it, you know, but there is one thing, as we always say, no, that show must go, you know, go on. You know, this is the difference between a proprietorship firm and a private limited company and a listed entity. All these listed entities are run by professionals and by the team, you know, and this business is so complex that one single person actually cannot run this business, as we all understand. You know, so I think this phase will also pass, and of course, and this company is quite old, so I think they will manage. I remember one thing, Nigel, on this topic. I remember one thing. I'm not going to take the name, and again, we are not talking about Patel. We are just talking about the concept. The same thing happened in one company where I was one of the money that was a big chunk of my portfolio, my worth. That was 15 years back or something. The company was doing reasonably well, but not like flying. And the you know, son of MD joined the company, and he really changed the company dramatically. Brought new efficiency, new technology, and you know, expanded, you know, in a big way and all. And the company started doing well. The stock price also went up 4 or 5 times from the bottom. And one day suddenly he died. He met with an accident and he died. And the stock price fell 20-30% just because people also thought that he was the key person behind all this transformation. And after that, the company went up 20 times, 30 times. You know, the stock price went up 20-30 times. So I'm not saying the same thing is going to happen in every company. Has different dynamics and you know, different strategy and all. So, but I think all these companies, they, you know, they are self-sufficient and they manage themselves.
No, got that. So unfortunate sort of news on Patel Engineering, but you're saying that you know, life goes on, and you know, the show goes on in that sense. Now, Vijay, another area, right, where we've seen a lot of action is telecom. And suddenly, from talking about just one player or two players, there is a viable third player. Tariff increases is essentially what has done it now. You have an exposure in the telecom space, not directly there, but you can't talk about specific stocks. At least I can sort of preface my question by naming the stock, Tejas Network, where you hold about 1.9% equity. How have your views evolved there on the telecom space? Because we've seen these tariff increases take place and increasing optimism.
So let me tell you, Tejas Network is also very expensive, although I am the maybe individually largest shareholder into the company, but that does not matter. Valuation-wise, if you go by the March numbers and last numbers and whatever, share is very expensive. But let me tell you, because now the pricing power is coming with all these telecom service providers, like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone numbers, 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is the for sure, earlier we used to talk about, in India, roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that when my driver keeps 2 mobile, I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
So the only issue is that, say companies like Bharti have run up so much. 3 years back, Bharti was sub 500 rupees, and now it's close to 1500 rupees. Another 2 sectors where there is a lot of long-term visibility is defense and railways. Order books are swelling. So the earnings growth is going to be strong, likely for the next few years, but the valuations are a big concern. So where do you stand on defense and railways, even for someone who has a long-term time horizon?
So let me tell you about like Bharti, since you took the name of Bharti. So I'm not recommending to buy shares. I'm just saying the future of telecom sector as a whole is bright. And stocks are different, and because stocks sometimes they become overvalued, sometimes they become undervalued. The stocks are different and sector is different. So let me clarify this thing. I'm not talking about Bharti or for that matter any shares. They are expensive. I do agree with you, but they had always been expensive. So that investor, I do not have any position in Bharti, Airtel and any other and all these telecom service provider. Let me clarify. So we're not talking about stocks, just for the sectors. And for the same reason, I think all this defense story is also expensive, railway or defense or whatever you call it. According to me, I do not have any position. So maybe I'm a fence sitter. That is why I feel maybe my opinion is biased because I do not have any position. But I really find them that they are expensive. But story has not ended. The story will continue to grow. The story will continue to be there maybe next 4, 5, 10 years and all. But stock market keep on adjusting. The price keeps on, adjusting itself. So this, again, as I said, you have to take your call that if your position is for 5 years, then it is all right. But if your position is for 3 months, 6 months and 1 year, then you should be worried about it.
All right, Mr. Kedia, just wind this down then. Defense as well as railways, well, a lot of people will be looking forward to the budget because they'll be expecting some kind of continuity of policy and also, in terms of spends. You've already told us maybe we could see some tinkering in the long-term capital gains. That could be a possibility. Hopefully it doesn't happen. But what else will you be looking forward to in budget 2024?
I think ultimately whatever policies has been laid down, been declared by this government, I think that will keep on continuing. Infra will certainly get a big push. Anything which is, economy or GDP enabler, I think that will be, they will push all those reforms and all. And of course, the biggest worry, if you ask me, what is the single most worry, reason to worry about India is that unemployment. So I think government will also take some decisions, to create income, whether it is rural or whatever it is, and to create jobs and all. That should be the priority of this government. This is what I feel.
Okay, all right, Mr. Kedia, always a pleasure speaking to you. But let's wind this down. As you were speaking about various stocks, we got a lot of inputs, a lot of messages I got, whether you're going to end it with a song. You want to give us a couple of lines, a 15-20-second song before we wind down?
So, सोच कर, समझ कर, invest कर, रूमर पे टिप्पे न टाइम वेस्ट कर, नॉलेज और पेशेंस का बिजनेस है ये, अनुभव से सीख और बेस्ट कर.
क्या बात है. I thought you were going to sing it for us, but I think next time you're here in the studio. There's just one last question. When you see your portfolio stocks, and these are stocks in the public domain, especially where you have more than 1%, and you own many of these for a long period of time. Most have done very, very well. If you had, you said that I think you did say that cash is little, you're invested, right? But if you had cash, where will you, are there any sort of, is there value in any of these things without naming companies, any of the sectors, or where there is growth potential also? Because a couple of times you said growth is there, but valuations are rich. But is there any area where both are reasonable?
No, I won't invest anything in this market. If I have fresh money, I would not invest any money in this market. For the simple matter, maybe there is a value in the stocks, but if market falls, that stock will also fall. If entire market falls. So maybe just to give peace of mind, just to have peace of mind, I will not invest in this market. I will just be a fence sitter or cheerleader and enjoy what is happening in the market and watch the match.
But at the same time, even though for your own holdings, a couple of times you said that they are expensive, but you're not you're not selling anything, right? Because
no, I'm not selling in a meaningful way because, as I said, that I'm not playing the test match. I'm playing the series. So I in the past also I held so many shares which I continue to hold for 2 or 3. I showed them 2 or 3 bull markets. So I have habit of this. So I'm not worried about that. So I will hold them. As on today, as of now, while I'm talking to you, this is my view. Maybe I will change my view after our interview is over. But as on today, I feel it's okay, no problem.
No. As Rakesh ji used to say, I reserve the right to change my sort of view. Right? That is always there. But since you are firmly of the view that generally it's looking very expensive, and it's not a question I would ask you normally, but we're at what, 24,000, almost 24,400, 500 now. Do you think by the end of this year, we'll be here, we'll be lower, we'll be higher? Just any thoughts at all? I'm just only asking you that because you are very firmly of the view that markets are in a bit of a frenzy.
Difficult to say, but I don't expect that it could be higher than where we are today. This is what I feel. Yeah, it shouldn't be higher than where we are today.
Okay, all right. Got that. Vijay ji, great to have you with us here. Thank you very much. Enjoy your trip in Ahmedabad, and we'll see you back once you're here in Mumbai. Look forward to our next one with some songs here in the studio. Thank you very much for joining us.
Okay.
So that is Vijay Kedia with his thoughts on the market. We're up 100 points, by the way. 24,430 is where we are trading at. We'll take a break. We are back with some short-term trading ideas with our technical experts. That's coming up next.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree. One tree for humanity. One tree for Mother Earth. One tree for a future. Project One Tree, a News 18 network initiative.
Well, the wish list was that we end virtually at the high point of the day, and it appears we're on course for that. Pharma stocks have moved up in the last few minutes. You have Divi's Laboratory, you have Sun Pharma. Both of them have spiked a little bit. BPCL as well, that was trading in the red, that's moved into the green. And Hindalco as well has moved up a little bit. So some of these stocks, they have moved up, explains why we're closer to around that crucial number of around 24,440 odd. Mitesh Thakkar is back with us. Mitesh, you've got a couple of buy or sell recommendations for a reverse trade in the next few days?
Nigel, I have, in fact, two buy calls because the market, despite the fact that we're close to the resistance, the market is closing near the day's high, and then you always have this chance of continuation happening. So we'll go with the BTST and MFSL with a stop at 1,004 or 1,004, 4.5, and look for targets of around 1,030. And a buy call on MRF. Tariff stocks are showing some good traction today, and MRF is breaking out. So that's a buy, not a BTST, but more of a positional buy. Keep a stop at about 12,700. 1,27,450, and look for target of 1,40,000 here.
After 3 days of consolidation today, you've seen the markets move up close to about 0.5%. Autos is the star sector. The Nifty Auto Index up more than 2%, and Pharma too has started moving up. The Nifty Pharma Index up 1.7%. Fertilizer names are coming in for buying. So NFL is up 4%. Madras Fert is up close to about 8.5%. Jay Bala is now with us from cashthechaos.com. Jay, afternoon. Thank you for joining in. Little bit of consolidation, but now you're seeing traction. The Nifty, the Sensex, both of them have hit record highs in today's trading session. What's the setup looking like?
Hi, Rama. Good to be here. See, the market continues to be up as long as it stays about 24,000, the round number. In fact, support is about 24,026 or something. But, you can take that round number as a very important support. Unless the markets were to close below that level, this stretched up move continues to proceed ahead. The nearest resistance for Nifty is about 24,650. And for the banking index, the resistance comes about 54,000, a long-term trend line. So the markets are still continuing to inch up, but continues to be stretched until the markets turn below 24,000. I think there's not much to worry about on the downside.
Okay, all right. Hi, Jay. Good afternoon. Good to see you. And Jay, what about individual stocks? What are the ideas you have for us?
Yeah, I have, as usual, two names. One is Pidilite from the F&O space. I think it's got an unfinished up move towards fresh record highs about 3,500. I think it will hold up the support at 3020. So the objective of 3,500, the stop loss of 3020. And the next one is from the midcap space. It's KRBL. The stock is breaking out of an inverse head and shoulders pattern. The stock has been underperformer since 2017, and usually inverse head and shoulders pattern marks the start of a huge reversals if it were to come after a prolonged decline, and this is possibly the case. We'll be very conservative. Place a stop as about 282 and look for 380 and possibly much higher, but we'll take it conservatively because the markets are stretched.
Okay, all right. Jay, I request you to stay with us. Let's focus on the general insurance stocks. They are buzzing in trade post their Q1 updates. Yash joins us with a detailed analysis on that. Yash?
Well, Nigel, before I get into individual players, the industry growth in the month of June has slowed down as compared to April and May. So the industry in April and May was growing at 15%. That has now, in the month of June, slowed down to 9%. The first quarter growth for the industry stands at 13% growth as far as the premium is concerned. What hasn't changed, though, is that ICICI Lombard is the player which continues to outperform the industry average growth in the month of June as well. So for ICICI Lombard, the June premium, that grew by about 16%. The first quarter premium, because of even stronger April and May, the growth for the first quarter stands at 20% in premium collection. The market share in first quarter FY25 versus first quarter FY24, there's a gain of about 62 basis points for ICICI Lombard. New India Assurance, the downfall continues. If I could say that June premium is up just about 4%. The first quarter premium growth of just about 3%, sharply underperforming the industry average. The market share first quarter FY25 versus first quarter FY24 is down 203 basis points. Go Digit General Insurance, the recently listed company, June premium growing at 13%, first quarter premium growing at 18%. Market share, there's a growth of about 11 basis points in the first quarter. Star Health Insurance, the standalone health insurance industry average growth stands at 22%. In the month of June, Star has grown by about 16%. First quarter growth for Star stands at 18%. Now, market share for Star Health Insurance amongst all general insurance companies, if one were to see, stands with a gain of 21 basis points. But amongst the standalone health insurance players, there is a contraction of about 252 basis points when it comes to that market share.
Okay, well, thank you very much for that, Yash. Appreciate it. Let's focus on one stock where I think there is some activity, Emami. Citi has issued a buy rating on the stock after, they've also raised their price targets. Mangalam is here with details on this one. Stock's up almost 4% now. Mangalam, over to you.
So the stock's been doing well. If you look at Emami over the last 3 months or so, it's up almost 70%, a little over that as well. A couple of factors working for them, and I'll talk about what Citi says in just a bit. The most important thing is that they have a portfolio for all seasons. So they do have the winter portfolio. Alongside that, they have the summer portfolio. So both those seasons did well for them. For winter, especially the moisturizers, etc., did well for them. The extended winter in the fourth quarter. And now the strong heat wave is going to do well for their cooling products business. And as a result of which, the company is likely to report a good performance in the first quarter itself. Add to all of that, the hopes of a good monsoon actually is reviving sentiment as far as rural demand is concerned. So all these factors working for Emami in the very near future. Citi has increased their target price from 625 rupees all the way up to 900 rupees. And while they talk about the near-term triggers such as, heat wave, working on their summer products and monsoons, improving the demand from rural as well as some of their monsoon-related products as well. The long-term strategic initiatives that the company has been taking provide for re-rating of the stock is what Citi believes. So the most important thing, increasing their sales and distribution force on the ground. Secondly, looking at tech and digital at the same time, increasing the sales coming in from the newer channels like modern trade as well as e-commerce, which currently account for 20% of their sales. Increased revenue coming in from newer, products or innovative products is something that the street is looking at, along with the company looking at increasing their ads as a proportion of their sales. Remember, Emami has among the highest gross margins in the industry and is, as a result of which, able to spend more than other larger players in terms of advertising, despite having industry high margins itself. So those are a bunch of things that Citi likes in Emami. Remember, despite the 70% up move that we've seen in the stock over the last couple of months, still trading at a good 30-35% discount to all the other larger FMCG players.
Thank you very much for that. Citi is also bullish on Affle India because of the increasing marketing spend done by advertisers on the digital media, on mobile-only platforms. So Affle is an ad tech play, and Citi has put a target price of 1,600 on ad tech. So Affle, they say that Affle India has managed to hold out on its own. It's in a market which is dominated by giants like Amazon, Google, etc. in the ad tech space, in the marketing space. But moving on to CESC, that's in focus and buzzing after it hiked tariffs in the Kolkata circle by over 5%. Vivek joins in for more. Vivek.
Well, that's right. So CESC is in focus today. What CESC has been asking the regulator for quite some time now has been there's been a twofold demand as far as CESC is concerned. Number one, to go ahead and hike the tariffs, which is still not rectified. Number two, they wanted to go ahead and put in a surcharge where they could go ahead and recover the variable costs on account of increased fuel prices. So, the second one has rectified. So from the month of June, CESC has gone ahead and started levying fuel adjustment charge to its consumers. The total quantum is 40 paise per unit, which effectively translates to a tariff hike of 5.7%. IFL says that this particular hike is good to cover CESC's incremental fuel costs and will ensure complete cost recovery. Also, what they say is that the accumulated regulatory assets stay in the range of 3,000 to 3,500 crore and will be recovered gradually with the regulatory approval. They are saying this particular development is quite important and positive from the stock point of view, given the fact that CESC actually trades at a discount to its peer set like Torrent Power, Tata Power, Adani Power, given the fact that tariff hikes as well as it was unable to go ahead and recover the variable costs. On the back of that, IFL continues to maintain a positive stance as far as CESC is concerned.
Thank you very much for that. Phoenix Mills is a big mover today, and that's up close to about 7%. Came out with their Q1 business update 2 days back. It's a good 25% year-on-year jump in their consumption and 13% on a quarter-on-quarter basis. Big move, 6.5% on Phoenix Mills today. Get into a break. We'll come back with more market talk. Stay tuned. Welcome back. 5 minutes to go for markets to close. And after 3 days of consolidation, this is turning out to be a pretty terrific Tuesday because we are virtually closing at the day's high. We've been in conversation with Jay Bala of Cash the Chaos. Jay, we've been highlighting the catch-up played by ITC. That said, it's still an underperformer year to date or over the last 1 year. Do you see upside in ITC?
Yeah, to me, ITC's move looks corrective. But if you recall from our conversations in April and May, I've said that FMCG index has got pending upsides to work with for 60,000, and that's what the FMCG index is doing. It's now at 59,000 unchanged, probably higher upside to come with. I'd even pointed out that the weight for the index will come from HUL, and the laggards in the FMCG space like Dabur and Emami, they would be making the move. And that's exactly what happened. And there's a slight change to that. There's a possibility that HUL could go back to test the all-time high at about 2,800. When it comes to ITC, I think the resistance comes at about 474 to 482. So that's even reasonable upsides if you're a trader. But I don't think it's going to fresh all-time highs.
Okay, all right. Talking about global cues, I just wanted to focus on two of them. One was the dollar index. It gave you a bit of a fear, but then it cooled off yet again. So how do you see the dollar index behaving? And also, if you could give us your view on crude. That as well has cooled off from the last time we chatted. Went to around $88 per barrel. That's Brent. And then it cooled off. Your take?
Yeah, most of the important global macros are at cross currents, Nigel. The dollar index, if it were to drop below 104, I think that will favor the bearish case. If dollar index were to cross 106.5, it'll be extremely bullish for the dollar index. And the main, as I pointed out last week, the main strength could come from the weakness in USD/JPY, or the yen's weakness and strength in USD/JPY cross. When it comes to Brent, if Brent were to start trading above 87.5, we'll once again see a very strong move past 90. But that's not my base case. I anticipate Brent to drop somewhere close to 70s. But be prepared for what happens if the Brent were to cross 87.5, 88. That's an important decision point for me from the market, saying that my bearish view on Brent is wrong. Likewise, the US S&P 500 has gone on for about 70 calendar days without a 1% drop. So again, if that were to start turning on, there'll be some sort of risk of the Bitcoin already is below the April low. That's already signaling some level of risk off. So watch out for cues from these global macros.
Okay, all right. Jay, we'll leave it there for today. Thank you very much for joining us. It's a pleasure and good conversation as always. So that's Jay Balav, Catch the Chaos. We're going to sort of start wrapping up things and where we are sort of leaving off today. So it's a pretty good close. Nifty, Sensex, new highs. Bank Nifty, mid-cap, small-cap indices looking up and nothing to really complain. The one space where we saw complete kind of reversal, but it could be just a day-on-day sort of phenomenon, are the railway PSUs and the fertilizer PSUs. RVNL, Wright, Circon, so many of these names all down 4-5% today. There were some of the largest volume-led losers, and some of the fertilizer names like Chambal, etc. were also down. But there was so much else which took its place on the winning side. Rice companies and the LT Foods and the KRBL. Jubilant Dreva was a big mover, and so much else which really picked up pace. Some of course, what we discussed, Phoenix Limited, as Rima mentioned, CAMS was a big mover. Really long list of big volume-led gains today. Rima.
Well, frontline action, the top gainer is Maruti Suzuki, 6.5% up, followed by M&M with a 2.5%. So the auto index was the best performing index today, up close to about 2.5%. ITC played catch up, closing up above 450. So ITC has gained close to about 7% in the last 2 weeks. Hindalco Titan rebounds after losing